Let's continue the tax conversation for a second here, guys. Did you happen to get a refund this year or did you owe money? Many people believe that if you get a refund, you did it right. And if you pay, well, the opposite, you did it wrong. Let's talk truth here. Is that really the case? And what is the best tax strategy when it comes to retirement?
I'm glad we talk about this topic today because when we're looking at, what is the best tax strategy in retirement, obviously everybody's situation is a little bit unique, but that is a kind of a question I'll ask people when I'm sitting down and talking about the overall comprehensive planning that we do. And, you will hear people say, well, I got a refund last year, so things are great. I don't need to look at my taxes. I was able to get a refund. But it's a lot more than that. Here we are as the date of this recording, heading into the 4th of July weekend, celebrating 4th of July, thinking about financial independence. It is not your patriotic duty to pay $1 more than your fair share to the United States government. I mean, look at the out of control spending that we have, right? We just blew through this debt ceiling. We had this big debt ceiling debate. You know what they did? They just decided to put more IOUs on the back of our shoulders.
Yep.
So why should we pay them any more than we have to? And in fact, if we look at, retirees, I think retirees, quite frankly, are in the crosshairs of who might have higher taxes sometime in the future. And if we think about that, it's because of the fact that's where the money is at.
Right.
A home or a 401k is usually the biggest or second biggest asset that somebody owns. And, most retirees, I know, they are typically debt-free, right?
Sure.
They've been in their house for a long time. They've enjoyed this big boom that we've had in the real estate market. They have built up a lot of equity in their house. And then also, those are the generations that have been saving for their retirement years. They've been building this big nest egg as well. So when we think about what the best strategy is in retirement, it's a strategy that's designed to keep the government away from your money. And you look at developing a plan in place. Again, 4th of July, let's think about financial independence and let's think about what that means to you. What that means to you and where we can help you out is let's get your 2023 tax roadmap put in place. You probably already put your taxes away. You've checked that off the list. We're well past April 15th. Or maybe you're somebody who is a business owner or for whatever reason, maybe you've filed an extension. But no matter where you're at, in filing your taxes for last year, I'm not talking about looking in the rearview mirror. Let's look forward and let's look at what can we do for the rest of this year and what can we do in the future years and for your loved ones to keep the government away from your money. What we can do is we can use our software to run a tax roadmap for you. We'll take your information, we'll put it in the software. Then the next thing that we'll do is we'll look for any gaps or opportunities on where you can take advantage of things like Roth conversions as an example. While it may make sense while the market's still temporarily down to prepay some taxes, maybe it makes sense to prepay taxes before you kick on your Social Security benefits. When we go through that, we're also going to take out our tax savers checklist. Within this tax savers checklist, we're going to go through 25 other items to take a look at ways to reduce your taxes now or also in the future. The way that you can take advantage of that is, again, give our office a call, 419-794-3030. Just say that you want to go through the tax savers checklist. We'll walk you through what could be the best strategy in retirement time to help you minimize the amount of taxes. We dive a little bit deeper into this, Curtis, and I know that you do this, and Scott, you do this as well, because these areas, they kind of overlap each other. The one area is looking at the withdrawal sequence. Many investors maybe have a bucket of money that they saved in an after-tax account. Investors have money in a 401k, a self-directed IRA. That's a secondary bucket of money, tax deferred. And some investors have money, in a tax-free account. Could be a Roth IRA, could be a life insurance. But when you look at it, they're trying to figure out, okay, what bucket do I pull from? And one of the things by going through the tax savers checklist we can do is we can look at that. Roth conversions, consider converting some of the traditional accounts over to the Roth conversion can be a great strategy as well. When you're looking at specific strategies and you're talking, Curtis, with your clients, what are the things that you're talking about on how to look at minimizing taxes and keeping more of their hard-earned money?
Well, thanks for asking, Nolan. And, first of all, for some of you guys out there that are thinking inflation is the biggest erosion you have on your assets, I would say you're mistaken. It's taxes. Taxes eat up your purchasing power and then inflation. And so when I'm looking at turning different spigots on or faucets for folks, it really depends if they were wise enough to seek counsel before they started the distribution phase, because taxes are very different in retirement, folks. And for those of you that aren't working with a professional that knows every tax consequence for your brokerage account or your tax deferred account or your Roth account, it's really, you're just doing your best. And at the end of the year, you have to suffer the consequences. So to answer your question, it really depends if they're in the accumulation or distribution phase, how we're turning on faucets.
Yeah, talk about, in this term, it's the mind shift. It's the shift from savings to accumulating your assets, withdrawing those funds, and the strategies can be dramatically different. So again, anybody that's listening, we can talk through this tax savers checklist. We'll look at things like capital gains, loss harvesting. We'll look at required minimum distributions, health savings accounts, charitable giving. There's so many different ways that you can look at your situation. So if you feel that somebody just recorded history and got your taxes done but wasn't proactive, call us. We'll get you that tax savers checklist, and we'll look in your situation on how we can try to help you minimize your taxes this year and in the future.
And folks, if you think tax strategies are just for super wealthy people, the top 25% earners in this country who bear the burden of most taxes, it's only $85,853, and that's from the IRS website. So if you have more than that in income in your house, you probably should be considering a tax strategy for your retirement income.
And again, just to reiterate, as we enter into the 4th of July weekend here, it is not your patriotic duty. It doesn't make you more patriotic to pay more in taxes, but there are so many people who, without a proper strategy, they're doing just that. Let's correct that. Let's make sure you're paying what you're entitled to, but not a penny more, if at all possible. Have that tax savers checklist run. Just give a call to the team, 419-794-3030. It's 419-794-3030, or go to the website, arhq.com.